Thank goodness for that. I won't be distracted by your lust while I give you this paper. Right. It's a real privilege to be here. It really is. But it doesn't take much imagination to wonder why this presentation, and indeed this presenter, is on here. I've only been here 15 minutes. I've already had 2 sets of advice. Bill Rees says, get back into the jeans and jumper, stop trying to fool people with the suit. And Jeff Whittington, who has often given me fatherly advice, and I owe him a lot through the career, says, just say you're reneging and that you've re-embraced neoclassical economics and the audience will forgive you. Sorry, Jeff, still can't do. You might be forgiven for thinking this is the pink fluffy bunny slot. This is where you hard men and women of the market actually show that you're compassionate professionals after all. Maybe it's my job to ease you into lunch, into dinner, sort of by doing the soft bit. I hope this isn't actually the case. I'm surrounded on the programme by sturdy, precisely focused examinations of selected areas of financial market research. And I now, as a green, know what a token piece of lettuce feels like in a double whopper hamburger. My presentation can't be the same as everybody else's. It can't be exclusively based on what we think of as formal empirical research. The first reason is because there isn't any. And that's quite persuasive in my view. But then I'm not really an empiricist, so I wouldn't know. The second is because I'm going to try and show that only 1 or 2 companies worldwide have ever undertaken anything we might realistically recognize as sustainability reporting. So there's no sustainability reporting on which to base our inferences. At the same time, corporate behavior. Do we mean financial corporate behavior or social environmental corporate behavior? There's an increasingly widespread view that these 2 things are much the same, that they're co-determined. And in fact, if virtuous behavior makes you rich, which is kind of the holy grail in this area, I want to show you that this is an important assumption, that it's completely wrong, extremely dangerous, and based exclusively on a tautology. So I think what we're doing is looking at the wrong question, but actually at the right time. What I want to try and show is that we actually sit at a crucial point in history. I should stress at the beginning, those of you who know me know that I'm a bit predisposed to hyperbole. I've done my utmost for the first time in my career not to indulge in hyperbole. What I'm going to do is a very even-handed, understated explanation of the situation. And this is so out of character, it's nearly killed me. But when I say crucial, you'll see what I mean shortly. But equally, it seems to me that never have financial markets been more important to the kind of futures we either choose or indeed may have. Never has corporate disclosure and reporting been so important, and as I'm going to try and demonstrate, never has sustainability been so completely threatened and therefore so crucial. So I'm going to try and answer this wrong question right time as best I can. Now, this all starts from the fabulous initiative from the English Institute. And this report I would commend to you. I was told off recently by one of my colleagues for failing to give it a kicking in one of my book reviews. And the answer was, because in fact it's really rather good. It actually takes a series of things we're beginning to recognize and looks for new possibilities, how we might move forward. This is not meant to be patronizing, by the way, in any sense whatsoever, because what's missing, as is nearly always missing, in the business accounting and sustainability literature is how on earth one connects one with the other. How do you get there from here? How do the exigencies of sustainability translate themselves into current business practices? So I have to take you on a really rapid journey. And I'm sorry about that, it will sketch across the top. There's a big paper which you can read at your leisure that goes behind it. I'm sure you'll enjoy it over Christmas. But this is a rapid journey, so I'm sorry it's not as focused as I would like it to be. First of all, the issues are important, and here's one of the major reasons why the issues are so important. I would, while I'm here, commend the quote to you, and in fact, if you look in the top left-hand corner, you'll see the publication from which it comes, selected with irony on this occasion. The issues matter in almost inconceivable ways, and I don't use that word lightly. Sustainability matters. It's whether the planet can continue to support life as we know it. I think that probably matters. Data, and I'm going to just review it very briefly, is increasingly and terrifyingly demonstrating that sustainability is more than threatened. There's a problem. That's not in contention. How do we solve it is in contention. Can it be solved through the actions of business? Can a variation of business as usual actually start to deliver a new world? Increasingly, it don't need to go very far to find many, many suggestions that the planet is safe in the hands of business, that in fact business representative bodies know exactly how to deliver sustainability. If these statements are true, fabulous. We can all have a great Christmas, and I can feel less guilty about having flown down here. But if they're not true, and I'm going to try and demonstrate they're not, we need to know, and we need to know in some detail fairly quickly. So in essence, sustainability is threatened. That is generally a function of economic activity and population. I'm not blaming you for population. But businesses, especially large businesses, are the engine room of economic activity. It seems essential to humankind to know whether the economic activity itself is sustainable, and indeed whether the components of economic activity are themselves sustainable. So that's what I'm going to try and do. And whoops, there we go. It's come out of one, never mind. The quote from the English Institute is spot on. Information can promote better markets and public policy objectives. Maybe it's my imagination, but I cannot think of a more important public policy objective than sustainability. It defies my imagination. And words matter, and this is the key to what I'll be saying today. We carefully define our words. I spent most of my career worrying about these sorts of things. But the words like sustainability, sustainable development, social responsibility and performance, issues which actually determine whether our children have a life, remain undefined. And that's the key of what I want to talk about over the next 30-odd minutes. So, the presentation of the paper, it has more in it than I would like. I had to talk briefly about sustainability and if it's anything to do with companies. Very briefly, I'm sorry about the brevity. What does sustainability reporting as it currently takes place actually look like? And then I can from there actually look at some evidence that has some relevance to what we're doing. So there's a solid lump of evidence, but in the end it will not tell us anything about sustainability directly. The paper goes on to conclusions of future research, which I probably won't have time for. Sustainability. The first quote, just to point your attention to the top. I'm going to do three things. I'm going to talk about sustainability briefly. Then I'm going to talk about sustainable reporting. Then I'm going to talk about what evidence we have in the accounting research area. First, the quote. This is just to orientate the mind. It's not to do anything other than that. We're so used to dealing with focused practicalities. Here's just a context. In a village of 100 people, 57 ages, 80 would live in substandard housing. I think it's important when we're sitting here thinking about these issues to recognise we live in paradise. We currently live in paradise. And to say otherwise would be wrong. Most people don't. 70 will be unable to read. I hesitate to say they're all in my class, but they probably are. 50 would suffer from malnutrition, about which even I can't make a joke. 6 would possess 59% of the wealth, and all of them would be, Christy, no, all of them would be from the US. Only one owns a computer. Just a scoping, okay? And then we have the quote. Sustainability is about the needs of the present, the needs of the future, neither of which are clearly being satisfied at the moment. That's the issue we have to address. Now, what do we know? Never mind. This was going to come in little bits. It's deciding not to do that. So never mind. You can take it in a one. Is the planet currently sustainable? I took 4 reports, all published in the last year or so. 3 of them within the last 12 months. The United Nations Global Environmental Outlook, WWF's Living Planet Report, Limits to Growth, and the United Nations Millennium Eco-Assessment. I've been reading this stuff for 25 years, and this stuff makes very, very unpleasant reading. Scares me. And there's one of the quotes from it. I can choose many other such studies. This is not cherry-picking. The stack of data about the state of the planet is enormous. Against it, there are other arguments, and the paper deals with those sort of carefully. Some of you may even know that Michael Crichton doesn't quite accept it all, and that, of course, is very persuasive to all of us. But there is a stack of data, and here's the conclusion from the UN's most recent, and in many ways most powerful piece of work, the Eco and Millennium Assessment. Human activity puts such strain on natural functions that the ability of the planet's ecosystem to sustain future generations can no longer be taken for granted. That's not messing about. And this isn't Earth first. We're not talking about eco-nutters here. We're talking about the biggest group of scientists that have ever been assembled on one single issue. What's the data from that? Well, I can't summarize it in any great detail, so let's just take highlights from it. Ecological footprint is an increasingly powerful heuristic for measuring the amount of space that individually we use or collectively we use for our activities. Generally speaking, we in this room use 10 times more space for our ways of life than those in Africa on average, just as for instance. Developed by Wackinagle Rees, it's a heuristic with all sorts of technical problems, but it's powerful at the broad level. Here is a measure of the world ecological footprint. And here's the land, the different levels of land we use. Energy in particular being amongst them the most significant uses of land. Now here's the good news. It is not contestable that we're well into capital. We're using up more than one planet of Earth as we stand. And we're going to continue doing so. The trends are all in that direction. You could put it another way. WWF measure, again, you can question the techniques, but they're very open about how they've done it. The ability of the planet to heal itself, to maintain our current ways of life under the most exquisite technological assumptions. Whatever you like, put them in there. The ability of the planet to heal itself is declining quite significantly, and has been doing for the last 20-odd years or so. Now, the usual response to this is, well, eggs and omelettes. We do have a stunningly fine level of material well-being, and there are several attempts to challenge this. Here's one of them. This is from Herman Daly. We've worked for the World Bank for a long time. It's a measure of well-being, which is an attempt to actually look at what we normally take as gross domestic product, and then measure things like, I'm sorry about this, happiness, well-being, welfare, in a variety of different ways. All three attempts come up with the same answer. Then from somewhere around about the 70s, there's been a decline in well-being across, in this case, the US. I don't offer that as a particularly profound argument. I offer it as a counter to the usual argument. Progress, happiness, well-being, welfare are direct, linear, progressing, and more the same would be good. It's a challenge just to that one point of view. Okay. The planet is unsustainable. You do the sums when you add in China and India, and that's what we need. We need three of them. And that's under stunningly generous assumptions. And I'm well aware that there's lots of ways in which we can cry wolf here. But I'll come back to that in a second. Most people I'm aware of, most data I can find, says this is where we're going. We simply cannot do what we do in any of the ways we do it currently in the planet as we see it. Now, of course, there are problems with the data. There are ways to cry wolf. I've dealt with that more directly in the paper. I would say the cry wolf, there were just two things. The first is there was only one wolf. If you look at this data, we have a shed load of different issues. The second is, I would remind you that the wolf did eventually turn up. And the two people that I respect most in this field, I've admired them for a long time. I think their predictions have been more right than most. They say we've got 30 years to turn this round before catastrophe. And they've been saying that for 20 or 30 years. I just add that in to give a little piquancy. We're not talking about 200 or 300 years, which is the current favoured preferred. You look at the data, it all comes in round about the 30-year mark. Okay, we're not sustainable. What about sustainability reporting? I'm old-fashioned enough to think that a sustainability report would actually tell me something about sustainability. If I read a financial report, I expect to learn something, however obscure, about the finance of the organisation. If I read a sustainability report from a company, take my word for it, you will learn nothing about the sustainability of the company. And this is, to some degree, also true if you read a social environmental report. Here is a quote from those well-known left-wing extremists, the Association of Chartered Certified Accountants and the Corporate Register. The number of companies reporting is insignificant. I'll come into that in a second. Organisations' understanding of the nature of sustainable development is not well communicated. We know something about sustainability. We know a lot about sustainability. We want to know how this is going to translate into our understanding of reporting by organisations. And the most difficult thing is actually making that connection. The practice of sustainability reporting is relatively new. There are problems with terminology. I won't get bogged down here, but there are problems. Generally speaking, we talk about standalone reports, the voluntary standalone reports produced by organisations, as moving towards sustainability reporting. For example, KPMG, who do the surveys every couple of years. Last year, all standalones were called sustainability reports. This year, they're all called corporate responsibility reports. I noticed Thames Water has also picked up on that one, because sustainability is hard and corporate responsibility isn't. But sustainability is in there. There's been a steady growth of such reports, these standalones. 52% of the global Fortune 250 now produce them voluntarily. But those numbers are actually quite insignificant. They don't, and apart from anything else, address directly global sustainability. How can I say such a thing? It seems to me it's very important that if companies are talking about sustainability, they should be talking about sustainability. Are they doing so? Formal surveys of these things are perhaps difficult, but a priori, we can say a couple of things. Most companies do not produce standalone reports or address sustainability or related matters in any way. Of those that do, the best try and approximate something called the Global Reporting Initiative, which is a multi-stakeholder voluntary movement which is attempting to set a gold standard for reporting in the whole area, moving towards sustainable development and sustainability. 113 companies at the end of November were in accordance with the Global Reporting Initiative. I think this is about 0.02% of all multinationals are somewhere close to the gold standard of sustainability reporting. Global Reporting Initiative approximates and aims to meet something called the triple bottom line, that all organisations, if we are to understand them in terms of sustainability, need to report on their economics, their social and environmental performances, a triple bottom line. And this is now accepted as a necessary but not sufficient condition. So that even if you're producing a triple bottom line, and I think 2 or 3 companies do, that does not yet tell you about sustainability. In essence, I can find 4 or 5 companies in the world that have ever formally addressed their sustainability. This is not something you would ever be aware of if you were reading corporate and corporate body related information. So, I'm getting ahead of myself here. If corporate reporting is not about sustainability, what is it about? I've chosen to finger BP for several very good reasons. I know there are more people in BP that understand issues of sustainability than any other company I work with. BP have been reporting voluntarily around social and environmental issues as long as, or if not longer than, nearly every other company I know. And BP produced this tosh in their annual report, in their standalone sustainability report. There it is, bottom right-hand corner, BP Sustainability Report. Sustainability means to us the capacity to endure as a group by renewing assets, delivering returns to our shareholders, blah, 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 blah. It means we're going to continue going until the chief executive retires or we get taken over. It tells you nothing, absolutely nothing, about the state of the society or the environment on which that wealth is allegedly built. So one company which really does know about it ends up telling you that its sustainability report is actually nothing about sustainability at all, and what we actually end up with is this: a sustainability report which is increasing in volume across the globe, conveying an impression of connectivity with sustainability while having no discernible link with it. It's a great trick if you can pull it off. And companies are doing so very, very successfully. By doing so, they prevent governments and NGOs taking sustainability seriously, because they don't need to. It's all right. It's safe in our hands. Well, it isn't. So, let's move on a bit. If I summarize briefly those points, the points are that sustainability reporting takes place. It takes place in standalone reports, and 52% of the global Fortune 250 produce them. That's about 4% of multinationals. Standalones aspire to meet the Global Reporting Initiative, and 113 companies in the world make it. This is after 15 years of trying, by the way. You know, we're getting there slowly. It is voluntary, by the way. The Global Reporting Initiative approximates the triple bottom line, and the triple bottom line is one of the necessary but not sufficient conditions to report on one's sustainability. To all intents and purposes, no company reports on sustainability. To do that, you need an eco-balance, you need ecological footprints, you need stakeholder maps. We know how to get towards those things. I think 4 companies have attempted it in the world. They don't like the answer, so it's not very popular. Interface, Co-op Financial Services, Landcare in New Zealand, and Marks and Spencer's have all recently publicly said, well, of course we can't be sustainable. What they haven't said is we can't also report on the extent to which we can't be sustainable. So the term sustainability, which, if the data that is stacking up is telling us the truth, is threatened. Our very ways of life, our very lives are at threat. Companies are appropriating this term by making it mean something completely different, and sustainability report is, whatever else it is, not about sustainability. So we're conveying an impression that sustainability is being dealt with, and it absolutely is not. At best, this is mischievous. At worst, this is the biggest con pulled on civil society. I don't know, my history's not good enough to go for a comparison. Okay, so sustainability is threatened. You challenge the data all you like, but you won't knock it over completely. Sustainability reporting, I've no idea what it's about, but it's certainly not about sustainability reporting. Let's have a look at it, though. Let's have a look at this not sustainability reporting. Can we actually consider the evidence about it? There is evidence concerning whether or not it improves corporate behaviour. To do that, I'm going to... Oh, no, I should actually have shared this with you. It's one of my favourite slides. Sustainability. Living within our means. The most unsustainable form of transport man has yet invented is air travel. But no, you can choose, as I was offered to choose, my most sustainable flight. I mean, a twisting and turning. This is because they came out top in the Dow Jones Sustainability Index. I'll come back to this. They're one of my least favourite people. They have nothing to do with sustainability either. What that should have been is Air France, KLM are probably amongst the least unsustainable. You will destroy the planet less quickly by flying with Air France, is what I should say. That kind of advertising is so affecting the discourse around sustainability that we don't engage with it seriously. So, can that kind of reporting improve corporate behaviour at all? First of all, let me say there is some circumstantial evidence about the standalones. It's probably the case that if you're in the FTSE for good, you produce a standalone. I haven't tested it statistically, it didn't seem worth the while. But there's work to be done there. You will see documents, one arrived on my desk last week. I have to laugh. Sustainability pays off. This is published by the World Business Council for Sustainable Development, a massively powerful group who got sustainability and business off the UN agendas regularly. They're a very powerful group. There'll be members in this group here. And they published Sustainability Pays Off. That's fairly direct. If you're sustainable, you make more money. It's completely untrue. Because nobody's sustainable, nobody reports on sustainability. What it is if you're a member of the World Business Council for Sustainable Development, who are quoted as saying they don't like sustainable development, it pays off. The Dow Jones Sustainability Index, which has, I think, about 2% of its weighting actually is to do with the environment and society, so it's not a sustainability index at all. but is thought to be. These all say, in general, that if you're more aware of your responsibilities, your financial performance tends to be greater. I can live with that, but it's got nothing to do with sustainability. Field work is nudging us in this direction too. The formal evidence is actually from annual reports themselves. And this gets us back to something that looks a little bit more like the presentations we've already had. I originally was going to do this at the beginning of the presentation because then it would look like I was doing real research as opposed to this arm-waving stuff. But it doesn't make sense. I need to put it here. What can we learn from the standard analyses standard empirical analyses of annual reports and the like? The world is interested in the relationship, generally speaking, between these three things. The Holy Grail tends to be, is there any relationship between financial and social performance? Our interest is in disclosure as accountants. Does this social disclosure have any relationship with social and environmental performance? That of itself is a very interesting question, by the way. We do know that there is a question mark over the relationship between financial reporting, and financial performance. We know it's questionable in places, but we don't doubt that there is such a relationship. I'm going to show in a moment that in fact there's no relationship between social and environmental disclosure and social and environmental performance, which tells you something about both. The other relationship is between social and environmental disclosure and financial performance, and that of course has all sorts of signalling impacts, risk, reputation, which I'll come back to in a second. Now, there is an enormous quantity of research predominated by the North Americans, but there is some in the UK and some in Australia as well, on these relationships. Most of them appear to be inconclusive. At least one of the reasons is because of the proxies used. Social environmental disclosure is measured generally in annual reports, rarely the standalones, generally content analysis, and the quality of disclosure, not the studies, I put that in the wrong way. The quality of the disclosure is generally very poor. This comes as no big surprise. But there is the question that some of the studies are measuring disclosure, the act of disclosure, and some are measuring that which is disclosed. In financial accounting, we tend not to have that worry. Social environmental performance is measured by a range of proxies. Here are just some of them: fines, reputation, even disclosure as a measure of performance, pollution expenditure, charitable giving. They tend to be the ones on which data can be acquired, not surprisingly. And finally, financial performance, which you guys know better than I do, is a difficult thing to get a handle on. There's different ways of measuring it, not least market versus counting. Now, it doesn't come as a surprise to find that attempts to make relationships between those three are often using different proxies because replications are not easily published. There in themselves would be an answer as to why, in general, the literature has been inconclusive, but there are slightly better ones. First of all, that relationship has been found consistently inconclusive. If there's any inference that one might be pushed to draw, it is that almost no relationship. Early papers by Wiseman and Roxman actually argued it was inverse, that the more you disclose, the worse you are. So we can really feel comfortable about the quality of social disclosure that's going on, and it's one of the better cases if you're a very heavy, hard-right market-based person. This is a great argument for voluntary disclosure, and if you don't trust the markets, it's a very good argument for regulation of disclosure. I'll come back to that regulation disclosure in a moment. I've got a real corker for you. So that's inconclusive. This one has been mostly inconclusive, a bit more surprising. One would have thought the signalling might have been more easily teased out. But recently we did some longitudinal stuff in this area, and that has produced some very conclusive statistics. That in general, if you have a predisposition to a higher financial performance, you're more likely to have a predisposition to disclose. Causality, haven't a clue. We'd have to get out there into the field and find out. If you care about this relationship, we'll have to go and study it. It doesn't keep me awake at night, so I can tell you. This is the killer. Until very recently, the shed loads of studies in this field had been very inconclusive. I genuflect to Richard McVeigh, who pointed out a study which has just solved all my problems here, which I'd missed. And I thought, I hate it when I miss a study. My coverage is good, so Richard, thank you. He sent me a paper study by Olitsky et al., in the Journal of Organizational Studies, which was just fabulous, which summarized this lot through meta-theory and came up with a conclusion that I found entirely persuasive, that the relationship is actually positive after all. Hey, good news. If you're rich, it means you're nice. No, it doesn't. You need to dig into this, because this is the key thing. It's a fabulous paper, which I commend for two reasons. The first is the quality of the paper itself does rather knock the previous literature into the shade, and that's hundreds and hundreds of papers in this area. But what really tells you what's going on here is Ulrich conclusion. This is a cracker. I'll try and keep my face straight. It says that as a result that there is a relationship between social and financial performance, this means that good financial performance is rewarded, which means that good social performance is rewarded by the market. Therefore, companies that are making money are going to undertake socially good activities. Therefore, companies don't need to be regulated on social and environmental behaviour. And it's there. I had to read it 4 times, because you think somebody's been colouring in your diagrams, and it's an astonishing statement, utterly astonishing, until you realise, of course, it's staggeringly narrow, and here's the key to why this relationship exists. The relationship exists because we are only measuring, in most cases, social and environmental performance, which has, via risk and reputation, is mediated by those two, it has likely impact on financial performance. That is, it's a tautology. We're only interested in social and environmental performance which has financial impact. Therefore, there are only certain types of social impacts, there is only certain types of social performance, and they're only the ones which generate financial returns. So we find we've got a rather superb tautology. So we've got a positive relationship between these things, but this only probably holds, as best as we can tell from the literature, as long as the quality of the reporting is really poor, and especially as long as it's not connected with sustainability, and that the proxies chosen are by definition those which have direct financial help. Basically, helping old ladies across roads when you get paid for it is a good thing to do. Helping old ladies across roads when you're not getting paid for it is clearly irresponsible and not socially responsible behaviour. So that's the essence of the thing. So I think that's quite a useful takeaway in its own right. So the relationships on which so much, particularly in the sustainability field, is being based, i.e. that virtue generates maximum returns, that maximum returns leads to social and environmental responsibility, are based on tautologies. This seems a very likely conclusion to draw. As a consequence, there's no evidence which derives directly on the two things that I'm interested in here. One is accountability, and the other is sustainability. We have no evidence on either. Now, if you review the literature, if you want to get hold of the paper, just look through the references there. There's about 30, which would tell you quite the opposite, until you examine the fact that they don't do any of the things they promise to do. So, to infer that the literature directly can tell us anything about sustainability is mischievous. Or, if we go back to the fact that sustainability is threatened, it's downright threatening at worst. Conclusions. Right, you can question this if you want, but all I'm trying to say is I'm not good. I'm saying, look, there's this stack of evidence, scares the willies out of me. Have a look at it yourself. I don't think we can ignore this for much longer. It's just coming all the time. Have a look at it. And I'll come back to the argument against that in a second. That's the first thing. On sustainability, we're pretty much convinced arrives from a combination of the number of people and what we do. It doesn't seem entirely unlikely. We can blame volcanoes and squirrels, but I mean, that's not kind of where we're at the moment. And a substantial proportion of those two things derive directly from the very success we're here celebrating. Modern companies in capitalism are stunningly successful creatures at creating a whole lot of good stuff. Bad news. Friedman was right. Free lunch is a thing of the past. Now, we find with no effort at all an enormous number of companies and representative bodies that are claiming that companies and corporate behaviour is at best sustainable, or more frequently, contributing towards a path of sustainable development. I would commend Marcus Milne's work to you on this, where he's labelled out the use of this language particularly. I think we have a problem, and it's not a problem that will go away, but I don't think it's a problem we need to get too upset about yet. What I want to do is just ask a very basic question. It's a question I've been asking for 25 years. I know I don't look that old yet, but if there's any evidence to support that our current ways of life are sustainable and that our current obsession with increasingly efficient markets is going to deliver the best of all possible worlds, I want to see the evidence. Because either the companies that are sustainable need to demonstrate this fact, and no company I work with is able to, and they should do that through their sustainable reporting. All I'm asking for is a quality of disclosure which doesn't currently exist at the moment. Or companies must stop suggesting that they are indeed sustainable. It's a simple enough question. There's a shed load of data. If we're all wrong about it and it doesn't matter, as you, BP, say it doesn't matter, would you please explain it to me? I'm a moron. Little words, pictures would help. Explain it to me. That's all I'm asking. And the way we do it through sustainability reporting. You claim to be doing sustainability reporting. Do it. I have something I need to get published, which is I've written a financial report for a company based on the same principles as BP adopts in its sustainability report. It has nice pictures, has a poem in it, it's got a little chat from the chairman, and it's got lots of things about stuff we might do when we get round to it. And it's quite nice. You guys would really accept that as a financial report. You wouldn't. Why do we accept it when we're actually talking about the future of the world? Companies are not, on the available evidence, on the way to sustainability. So, takeaways. It's too easy to panic. Let's say the two people I respect most independently said, yeah, 30 years. Crikey. That gets my attention. But take it seriously. We don't currently take it seriously enough. That's why that quote, I don't know where the devil you got it from. Somebody's blown the gaff on me. I don't know where you got the quote from. But that's why. Take this seriously. Because information is needed for markets. I don't really think your returns are going to matter very long when we're dead. Let's just sort of put it at the blunt levels. Because that's probably what we're talking about. If we're not, somebody should piece that together, and please, just take a bit of time to explain to us poor, ignorant, moron greenies why we're talking complete nonsense. Because nobody is doing so. The anti-evidence isn't there. But corporations need to know to what extent their claims are right. Because what we need to do is harness the capacity of corporations to actually turn this around. Nobody better. I would commend Jonathan Porritt's recent book. It sets up the disaster scenario extremely well, but it actually is stunningly positive about the way in which it's corporations that are going to get us out of this mess. Only substantive reporting is actually going to clarify this for us. This is the one thing that's missing here, is genuine data reported genuinely by companies. We need that stuff. The vacuum, sort of small farty sound, I think, rather than vacuum left by the OFR disappearing, I think we actually need ICAW and organisational to actually call for very substantive reporting on sustainability. Let's avoid falling into these silly arguments from Olitsky about market forces will always deliver perfection, and also avoid OFR light, which is the way we're going at the moment, and see if we can actually get this debate with proper data. I would love this presentation to have been entirely based on formal empirical studies. Give us the data and maybe we can undertake those. And some of the boys in this audience would gladly keep us on track to make sure we did good research as opposed to just bad research. Thank you very much indeed.